Hello everyone, and welcome to our EY Thought Center webcast. I'm Channing Flynn, EY's Global Digital Tax Leader and Global Technology Sector Leader, and your moderator for today's program. We are excited that you have chosen to join us for this first edition of our Global Digital Tax webcast series, featuring leaders from our global EY digital network. With digital being the biggest, most pervasive disruptor of today, as well as the springboard to our future, it is a topic of important discussion, with tax very much being a part of the storm. Our goal for this series is to bring you a regular cadence of insights and robust discussions with a holistic perspective on the variety of topics and issues that emerge almost daily in our digital world, from responding to the business impact of digital, to harnessing digital innovation that can drive value in the organization, to tackling the necessary transformation of the corporate tax function as we know it. Our content today will be shared in video format, so you may want to maximize your video window to enhance your viewing experience for the remainder of this webcast. Today's webcast was pre-recorded from Barcelona, Spain at a gathering of our EY's Digital Tax Global Leadership. However, please don't let that prevent you from asking questions and responding to the polls. We will review all the questions asked during the event and get back to you after the event concludes. You'll also see polling questions throughout this webcast. You'll need to respond to them in order to qualify for CPE or CE credit. So if education credits are important to you, please keep an eye on your screen for the polls during the course of this webcast. I also want to remind everyone that you can download the slides for today's webcast by clicking on the green resource widget on the bottom right of your viewing console. You can also follow us on Twitter using the hashtag EYDigitalTax. So with that, let's get started. It's my pleasure to introduce the speakers who are joining me today for this interactive discussion. On my left is Mark Klitgaard. Mark Klitgaard is our global digital tax resident based in Silicon Valley, California. To Mark's left is Carolyn Bailey. Carolyn is based in Houston, Texas, and is our digital tax administration leader. To Carolyn's left is Aidan Stokes. Aidan is based in London, England, and is EY's EMEA digital tax leader. On my far right is Albert Lee. Albert is based in Hong Kong and is our EY Asia Pac digital tax leader. And to the left of Albert is John Dobell. John is our global compliance and reporting leader based in Sydney, Australia. Both Albert and John also are the co-founders and the steering committee leaders for our EY Tax.Tech program, which we'll get into a little bit later in the program. To John's left is Yuko Cairns. Yuko is based in Tokyo, Japan, and is our Japanese digital tax leader. So thank you for joining me today, guys, and I look forward to conversation. We're going to share with our audience what is digital. So John, I'd like to start with you, and you and I began this journey a while ago with many of our leaders around the world, and we set about to understand what was digital, what was the trend of digital, and how did we pull out from that the concept of digital tax?
I mean, it really started a while back with us looking at a firm at what was going on in the broader market with our clients and recognizing, I guess, two key trends that were coming through from that. Firstly, a number of our clients who were really wrestling with being relevant and valuable to their businesses internally by responding to the change that business was going through digitization. And so as tax and finance personnel started to get their heads around that, there were really some tricky questions that were starting to come to all of our people around, well, what role does tax play around that as the world is changing? So that was the first key trend, I guess, we saw. And the second one, I guess, was really around tax professionals and finance professionals, both within our firm but also in our client base, really focusing on how do they harness the elements of digital to get better value out of what they're doing.
I think what we've seen also at the global level is that the concept of a digital transformation has overtaken the economy. Digital is permeating every aspect of our personal lives, of our corporate lives. The functionality of the tax department is going along with that. But we also see our companies transforming too. As they seek to become digital themselves, it manifests itself in finance and tax like you're describing, but it also is fundamentally changing the way that they're desiring to serve their customers. Albert, what have you seen from your role in Asia? What are clients and our partners focused on out in your part of the world?
Well, I think there are two things. First of all, a lot of the revenue authorities now are beginning to apply digital themselves. So that means our clients need to react in how they respond as they have to actually file things in an electronic way. They have to think about the data that they're passing over and what that data actually will reveal. And the second thing is because Asia Pac is made up of a lot of countries. And so it's all about transparency and getting, I suppose, management or governance over all the tax affairs across the whole region. And so in order to get control over that, they need to apply digital methods in the way they do their work.
Right. Aidan, I'd like to come to you and give a perspective from Europe and EMEA, but based in London, I know that you work with well over 90 countries in our EY's EMEA region. What's your view on how the digital transformation wave has affected our clients, but also our firm?
You and I were lucky enough to have a demonstration in April from Commissioner Mishustin in Moscow, and you and I saw live what the Russian State Tax Service is able to do with the tool that they have, and it's truly eye-opening and actually quite scary for our clients, because as they start to understand it, there's a whole new world of experience out there for them. The second, I think, is I think at the moment clients are on a voyage of discovery. They're starting to grasp some of the issues, some of the constructs, some of the challenges that are out there, but they're not fully understanding what it's going to mean. And so I think we're at the very beginning of a very long journey, and I think our clients are as well, but they're now engaged, they're now curious, they're now starting to ask questions.
I think your example of what we saw in Moscow, the advanced state of the way they think about it, the advanced state of their technology, I really think is the bar. It's the example which many other countries are going to seek to follow.
Yep.
So at EY, what we've tried to do is build a strategy around which we can talk to our clients, but certainly our own account teams and partners about what is digital tax. We're going to unpack that for you here today in this webcast. We're going to talk about each of what we call our quadrants, which is really a framework to understand the concept of digital in the general economy, but more specifically what digital is to a tax department. Supporting that, and something that's very unique and that we're very proud of at EY, is the concept of our EY Tax.Tech program. We're very lucky that today both Albert and John, who've been the architects and are the steering leaders for that organization, are with us. And John, I'd like to ask you to really tell us, what is EY Tax.Tech? What is it going to do for our people? And what is it going to do for our tax practice? And then, of course, most importantly, what's it going to do for our clients?
EY Tax.Tech came about probably a little over 12 months ago as we looked across the firm and across our client base and started to really get a handle on the number of technology solutions that we were building out and that our clients were looking to us to help them support with. And one of the things that I guess as a global firm we were able to do very quickly was to start to weave together those technology solutions, start to share the way people were thinking about ideas or solving some of those ideas. And from that, we really started to bring together a whole holistic focus, I guess, globally around Tax.Tech. In terms of how it's then permeated through the organization and particularly for our people, one of the things as we and clients are wrestling with the changes that we've heard around disruption in the revenue authorities is having people that are much more technology literate and focused and can be quite deep in that. And so creating an organizational structure that allows us to bring those people together, to provide them with a consistent career path, to give them a focus around technology tool sets and really deep learning, that's been one of the real gems, I guess, that's come out of the Tax.Tech structure. And so whether it's deep data scientist skill sets that we need to get access to, or whether it's knowledge of new ways in which we store and transmit data, being able to respond to those and help clients really identify not only the issues they're wrestling with, but very quickly come up with an infrastructure and a plan and a solution set. That's really the key thing we've seen come to the fore out of it.
Right. Aidan, we've seen out of our practice in Russia and certainly in Germany just some amazing tools, and we've seen that, of course, across Asia. And Albert, I know that you've been instrumental in building teams of tax technologists that are housed within EY Tax.Tech.
We are, as tax professionals, very used to having communities of international tax experts or indirect tax experts where they can share their knowledge and bounce off each other, right? New creative ideas and so this is a recognition of that specialism and creating this community that allows this group of people to then go and harness their skill and sharpen it. And this, I think, will bring a lot of value for our clients.
Okay, so what we'd like to do now is turn our attention to the digital tax strategy at EY. The concept of digital, we found when we started on this journey more than 2 years ago, was confusing because the word digital can mean so many different things. What we've tried to do is build a framework by which we could have discussions with our clients, but importantly also discussions with our people to really talk about what it all meant. And the first two elements of that have to do with how our clients are feeling the transformative impact of digital on their businesses. So Mark is going to talk a little bit about digital tax effectiveness, which is really the discipline of understanding how the digital transformation impacts our clients' businesses and how the tax authorities all around the world are seeking to understand that so they know what type of taxes they need to put into their local country laws and rules to properly tax them. Next, Carolyn's going to talk to us quite a bit about digital tax administration. This is really, Aidan, what you were talking about that we saw in Russia, which is how governments are using new technologies, much more simultaneous, same-time audit-type technologies to understand what taxpayers are doing around the world and seeking to remove controversy, remove fraud through technology to gain access to clients. The audit process will be more efficient and obviously obtain the tax monies faster. Those two elements form the left-hand side of our quadrant. The left-hand side, again, talks about how digital tax impacts clients' tax liabilities and what governments are doing to really understand the businesses that they're in. On the right-hand side of the quadrant, there's the concept of tax technology and also tax big data. And I'm going to engage everyone here on the panel to really talk about what are the technologies that are out there that we're using to help our clients, but also that clients need to be thinking about using in programs and analytics and automation type tools that they can use to enhance and make more efficient the discipline and the path of tax in the corporate organization. Then finally, you'll see on the quadrant the concept of tax big data. This is really about making sure that taxpayers and those that advise them understand the messages that are lurking in the data that an organization generates and analyzing that information to make better decisions. So I think what we'd like to turn our attention now to is digital tax effectiveness. Mark, you and I built this together with many of our partners around the world. It's intended to be across all of the subservice lines of EY, as you know. Can you talk us through a little bit about how did digital tax effectiveness come about? You and I are both based in Silicon Valley, so I think that's natural. Where do we see it going with our clients around the world?
Digital tax effectiveness goes to the heart of the question of a company. What is my tax profile going forward? And from a Silicon Valley perspective, companies grew up with technology, they grew up with intangibles. It's very imbued in what they do, fundamentally. What we're seeing is that companies across the globe, across sectors, are moving towards using technology. And so you have this convergence. You'll hear about things like fintech and medtech and auto tech. And what that is meaning is that technology and all these capabilities are now being brought in to how they fundamentally do their business. Sometimes I think about this in Internet of Things construct. You can say I have new sensors and so forth that are imbued in my product offerings, which then can be the basis for new services I give my customer, a new revenue stream. Or it can be, in many instances, how do I run my supply chain, how I keep my machines up and running, and using all that data to drive out cost. And at the bottom of that is basically there is more profit, more revenue, and how is that going to be taxed across the board? How do I frame my transactions? How do I take care of my opportunities or take advantage of the opportunities? And how do I mitigate the risk profile that is presented by the fact that you're using a new technology in a new business approach, and at the same time, the rules under which those transactions are being taxed are changing. So the governments are changing the rules on you, and you're changing the business functions that you're doing. And the idea is as you become digital, you are managing and steering how that level of tax is going to be generated. It spans everything we do. And this is where we see it a lot of times. I'm about to enter a new market with a new service. What do I need to think about? And you have this whole range. And it's everything from I'm selling, do I need to collect VAT? Gee, I'm putting a server somewhere to help me facilitate that. Does that cause me a problem? Gee, my people are now diffuse. They're all over, and they're all contributing to how I make this intangible, which is fundamentally what you generate and leverage in a lot of this digital. How do I make that work? There's a lot of opportunities out there. A lot of countries now want to be known as digital, be known as innovative, and so they're giving out credits and incentives, and how you arrange what is done where can influence your ability to get those credits, those incentives, as well as from a bigger perspective, when you have this incremental profit, how you can place it in the jurisdiction that you think warrants it, rather than a government coming in later saying it should be located somewhere else, not in your choosing. What we've seen is kind of a trajectory of growth, particularly on these convergence. And it starts with a company having a strategy and a vision of where they want to be in terms of their digital business, and how does a company acquire those capabilities? It's a build versus buy decision frequently. From there, you start to work through, well, how am I going to deploy this? And it's that deployment of assets, be they people or physical assets, and commercial transactions, how am I interacting with people, that will drive this tax profile overall. So you have the acquisition now phase of it. Now you're in your deployment stage, which is usually, how am I going to arrange who's going to be doing what, particularly with the intangibles, so I can say my country or my jurisdiction that I want is going to get the profit. Right. That's classic operating model effectiveness. A lot of times when you talked about tax planning in this type of environment, previously, centralization was a key factor, and also co-location. What we're seeing with digital is a scattering to the wind of a lot of the capabilities that are key to driver, and how to frame what those disparate pieces are doing to go feed to your whole. And being able to, as someone said, not step in it, make sure that when you're transacting, you're collecting the correct amount of tax, etc.
Mark, I want to ask you a question, a very specific question here. You talked about the concept of convergence, which is digital is causing non-traditional technology or digital companies to adopt a business strategy of we need to be digital. We've seen that, and as you mentioned, in the automotive industry and certainly in the banking industry and even mining, mineral companies and consumer products companies. And then you also talked about how quickly it is, given what it means to be digital. You can be doing business in 10 countries today and 150 countries very quickly. And so given those two themes, what are you seeing on the policy front? We understand that the OECD BEPS project has as action one, tax challenges of the digital economy. That's really pushing taxpayers and companies to understand rules that they've not had to understand before. Can you talk a little bit about where you see some of the policy going?
What we've seen is the OECD, as you mentioned, action one of the BEPS, is put out a stake and say, we think that first, there is no thing as a digital economy, it's just the economy as a whole. But given that, we think there needs to be changes to the rule set by which companies are taxed when they grow cross-border. Then they backed off. They haven't given the specifics as to how to do it. They've outlined broad tenets, which basically go to the idea of you need far less presence in the country to be taxed. What has happened in the interim, as the OECD has not articulated particular countries have stepped into the vacuum. And you have each individual country making up their own rules about how and where you can be taxed. And while there's some similarities, there's a lot of differences. And how something is characterized, how it is viewed, changes between country to country. And you're in a very nimble, very dynamic situation where you don't have consistency other than being aware and being diligent of finding out what is the particular rule in your country is the only guidelines you have.
I think, Mark, digital tax effectiveness is about, if you're not a tech company, if you weren't born in the digital domain, what we've put together is a real complex but also thorough way to think about across what we do for our clients is what could your tax profile look like that you don't see coming.
Right.
Aidan, earlier today, you and I were talking about how digital tax effectiveness and advising clients on this is not something that's limited to people that might do international tax or transfer pricing. It's holistic. Can you talk a little bit about what you meant by that?
I think the big thing that we're seeing is a dawning realization on the part of tax directors across EMEA that actually their companies are changing around them and their companies are starting to do different things, and that has different tax consequences and unanticipated tax consequences, and they're starting to try and get their heads around, well, in this digital world where everything is moving at an incredible pace and the company is changing, then their tax profiles are changing at the same time, and they're in catch-up. It's less a case of planning, it's more catch-up, and trying to mitigate wherever they are and think about the future. if you think about a world where, instead of moving stuff across borders, we send a file and we kind of print it on site, or we do things differently in the jurisdiction, then what's the value of the IP now? It's fundamentally different. Where is the IP created? What about all of the customs duties, the VAT implications that were there before? They suddenly changed.
Right.
And the question that arises is, again, are we playing catch up or are we planning in advance? It's great when we can plan in advance, but that's not always the case.
As you talk about those ideas and themes that are going through business, I'm struck by our work and initiatives around 3D printing. I think there's nothing more than 3D printing completely disrupting the manufacturing and distribution business. And Mark, to your point about VAT and indirect tax, et cetera, the issues there, not only are they not clear, but it's actually happening today. And so there's companies that need to figure out today what's the tax answer across a whole range of potential implications. Yuko, I want to bring you into the conversation here a little bit. You're based in Tokyo, Japan. Japan's always been one of the leaders in technology and innovation. What are you seeing corporate enterprises, our taxpayers, our clients doing in Japan around digital tax effectiveness in their supply chains?
Well, one of the things, just on that, playing catch up, and the government also playing catch up. What we see in areas like the blockchain and financial institutions, they are going into new businesses. But from tax perspective, firstly, we need to understand the legal framework. The government hasn't really worked out the legal framework. And that's a catch up that we need to firstly understand and then communicate to the client so they can confidently go into the business.
Right. No, I think Japan is obviously one of the more sophisticated and complex corporate tax systems to understand. And what we're seeing for clients that are based both within and without Japan is that the complexity and sophistication that the Japanese tax authorities will bring to this is going to be, I think, example setting for the rest of the world. So we look forward to a lot of what that is.
Yeah, we look forward to that.
So what we've talked about here is digital tax effectiveness. And the point that I want to use to segue to our next section is that as global companies become digital, the tax authorities are already, but are increasingly going to be keeping up to understand where they can find taxable transactions and then assessing tax. So that's going to be a confluence of two factors, a changing economy and a changing tax system at the global level. The OECD BEPS Action 1 project is just but one input into all of this. It's not been overly clear thus far into their exercise on Action 1 that they have solid recommendations. And instead, what we're seeing is a lot of unilateral action around the world, mostly reacting to perceived abuses and problems rather than a cohesive tax strategy for the digital economy. So that leads us to where are digital tax administrations today and where are they going? And we want Carolyn to get an overview from you as what is digital tax administration, why it is important, and why do companies, no matter where they're headquartered or where they do business, need to worry about it?
Yeah, so I'll take you on the journey of how I learned about what they're doing. Basically, being U.S. based, working with a lot of U.S. multinationals, we started hearing a lot of angst and things about dealing with the Mexico tax authority or Brazil, and this is so difficult. And we really wanted to understand in a really detailed way what these administrations were doing and why it was creating issues for many of our clients. And what you found is for countries that you might not think would be really ahead of the curve, they actually have invested heavily in digital technologies, in people, hiring physicists, mathematicians, people that really understand how to work with data. And so you have countries like Mexico and Brazil, and you mentioned Russia, that want your data every day, maybe even on an hourly basis. Right. They want real-time transactional data. They're looking for financial data, in some cases customer data, employee data. So they got a taste of data and they like it. And I've been to a few, like IMF, World Bank meetings, and there is this is cool. We like it.
One of the things we saw
yeah.
in 2016, and Aidan, maybe you want to chime in here, is that countries like the United Kingdom and HMRC have put out position papers
Yes.
that say we want to transform our tax authorities, HMRC,
Yes.
for a digital generation. We want
Yes.
to become a digital organization. And the OECD very recently in this year put out a paper that was describing how to fight tax fraud through new technologies.
Right.
So we're building that into
Right.
digital tax
Right.
administration
And they're
too.
all, they just like we do. They share information and they share knowledge.
The frightening thing, just
Yeah.
from my perspective, is where the UK wants to go in the short term is nowhere. I mean, they're starting,
Yeah, I've heard that
well
too.
to the well to the left of the curve. And yes, they're going to catch up. Yes, they're making progress. But if I look at where Mexico is, or where Russia is, or where Spain is heading very soon, they have a long, long way to go
Yes,
in the UK.
there are some countries that have quite a bit of depth of data that they're requesting. And what you generally find is as countries begin the journey, like they begin to start requesting data, what happens is clients are generally transmitting data, just transmitting, lots of data to tax authorities. And it's a little bit quiet. You're sending a lot of data and things aren't happening. Then all of a sudden, the government starts to get more sophisticated and they start to look at this information. And why are they doing it? It depends, right? So in Latin America, a lot of it is to reduce fraud. A lot of it is to collect taxes faster, to collect more taxes without changing tax law, right? And to become much more strategic around audits. And then you see, like in Europe with the SAFTI, that is absolutely digital financial data that is transmitted.
Carolyn, define SAFTI for our audience.
Oh, the Standard Audit File for Tax. So that is a group of the OECD countries that similar, they're supposed to all follow one framework, and they make it just different enough to drive you nuts, right? But but that's really what they're doing, and so they're bringing in these requirements to basically help them audit more strategically
And share information.
Yeah, and
more.
share information.
Carolyn, one of the things that I've seen you and the group that works with you globally do is provide a scale where companies can understand where they are in the digital tax administration framework.
Yeah.
And it's important to understand that we don't think digital tax is e-filing your tax return.
No,
right?
that's
so
a-
can you
that's a-
talk a little
yeah,
bit
that's a-
about that scale?
Yeah, that's a
And then
good
also
point.
how we can help taxpayers understand where they are on the scale. But you've also done some great work of taking the countries where our taxpayers have their businesses and put them on the scale. Can you
Right.
talk about those two?
Yeah, so basically we created this level framework because we needed to simplify what was going on because it is so complicated and confusing. And so when you say tax administrations are going digital, what does that really mean? And so we have 5 levels, and we basically, with the level 1 is a digital tax administration that requires taxpayers to electronically file returns, is a level 1. And quite frankly, that's the type of tax administration that we're all used to dealing with, right? US is level 1. UK, level 1, right?
Japan too.
Japan too, yes. Yes, but then
Interestingly, 3 of the largest, most developed economies in the world.
Yes. And then level 2 countries are those countries that begin to require a submission of digital financial data, transactional data. It's generally near or real time. And it's in a required format. And of course, every country, it's a different format. But there are, we've got at least 30 plus countries right now all over the world that are requiring real-time digital transmissions. Level 3 and 4 are those administrations that we start to see evidence that they're doing something with the data. And so they start to cross-match data against tax types. So no longer can you just be a VAT and income tax because the administrations are cross-checking that information. And if it doesn't match, you could get a notice, right? And then in level 4 is more of they begin to get more sophisticated. Mexico is a level 4, starting to get very sophisticated, moving to an electronic audit. And then we call level 5 which EY calls that very disruptive because that is no more tax returns. Right? So we call it e-assess, where the government has enough information about you to actually send you the bill. And Mexico's moving there. The UK says they're going to be there in 2018 for some companies and 2020 for others. But we're starting to see, countries starting to move more toward that.
Right. I think with introductions and adaptations of new technologies like the blockchain, I think moving from 1 and 2 level up to level 4 and 5 is much more likely, I would say, in the next 5 or 10 years.
Yeah,
What Aidan, you and
so.
I saw in Russia and where that country is amazing, because they're already at 4, pushing into 5. That amazing experience where the minister of the Russian tax authorities actually pulled up our VAT invoice from the previous night's dinner while we were in his office is pretty indicative
Yeah, that's really.
of how that's
Oh,
going.
isn't that comforting?
So, and there's, Carolyn, also you've made the observation that the countries that have engineered this have done it from a fraud prevention perspective, from tapping into the underground economy or the black economy a little bit, because it enables them to use technology to get at that. But as larger jurisdictions like Japan, like the United States, and certainly the UK see the value of that. They're able
And
to
Australia.
spend
Yeah.
less money
Yeah.
on auditing paper and a lot
That's
more
right.
a lot more time counting the money that they raise and reducing the time spent on controversy. We need to move forward here, but before we move off of digital tax administration, Albert is our Asia-Pac digital tax leader. You advise some of our largest clients in the area of EY. How are you seeing governments take advantage of the digital tax administration trend that Carolyn described?
Well, the big one and the obvious one is China.
Yeah.
I mean, China having a far more, centralized government.
Like Russia, I think, quite a bit. Yeah.
Are able to introduce rules that would not be so acceptable, I suppose, in Western economies. So they're able to actually request information of the type that would probably get a lot more pushback in Western countries. So with that power and the more centralized way of governing has enabled them to actually go and run these projects. And there are projects at the moment, because they've called them pilots, and they started one which just involves 1,000 clients. They've reduced it down to a few hundred now, as they've taken the pilot information and processed it. And so actually, even for them, it's a mode of discovery, because if you're very cynical, what they've done is they've gone on a big fishing expedition, and now they're looking to bring it, and now they're looking to process that information and become more focused.
Right. Yeah, China's definitely a mover on the global scale, and I also think an example setter. What we want to turn now to is the rise of tax technology in the discipline and the practice of tax. And the whole area of tax technology and tax big data is something that we've been looking at and working with for many years now, but we've really over the last couple of years brought this together. And so, John, I'd like to ask you, we've talked about EYTax.tech a little bit and how we're building an ecosystem of a new generation of people, of tax technologists, as we've called them, who will really support our overall tax practice. But just focusing on tax technology and the types of tools and the types of technologies that we see coming in to tax departments globally, what are you seeing, what is the firm seeing, and what are our clients asking us about?
Yeah, the landscape for tax technology has been fascinating, if just for the speed of its change in the last couple of years. If you look out into the market more generally, there are a few trends that are really driving a significant change in that space. The first is the cost of technology is relatively cheaper now. So things that people wanted to do several years back were prohibitively expensive. Now it's much cheaper to go and implement particular technologies and skill sets and put them in place and drive them out. So that real cost, I guess, of technology has been a real driver around it. And secondly, I guess going hand in hand with that is just the continuing access to technology talent as the next generation of our people come through in our business and in our clients' businesses. It's a digital generation that's grown up expecting things to be there and readily available and easily accessible and cross-referenceable, and that permeates all different parts of what happens. And so what we've seen trend-wise from a technology point of view is you go back maybe 10 years ago, there were a number of larger players in the tax technology space who had some version of an enterprise solution that they would put in place. They were reasonably comprehensive. They were reasonably good globally, but didn't have full coverage. But they were relatively expensive and time-consuming to get up and running. And whilst those players have remained relatively nimble and moved a little bit with the times as they've needed to, what you've seen is this complete blossoming of internal skill sets around new niche technologies that are allowing people to do things that they really couldn't do a couple of years ago. So, being able to tap into a particular set of analytics capabilities and have somebody, on your staff that knows how to grab that data and present a really cool visualization of it, several years back we wouldn't have seen that. I think the biggest one, though, that's really hit the fore is the whole process of robotics process automation, or RPA. I look back on our clients' businesses and our businesses a couple of years ago. I don't think anyone knew that term. They weren't using it. And now you almost can't have a discussion amongst our people or our clients without tapping into that. It has permeated that change really in what happens in that space.
Let me ask you and Albert chime in here if you'd like to about RPAs. Sometimes you read headlines in newspapers or business magazines around the world that the robots are going to come and take all of our jobs. I actually personally think the opposite. I think there's just a whole new field of jobs opening up. As the co-founders and the steering committee leaders for our EY Tax.Tech initiative, which implements tax technology at our clients, can you talk a little bit about where you see RPA and robots within our business impacting new jobs in the discipline and career of tax?
I don't think it's going to take away jobs for two reasons. I think one, it actually frees up a lot of the mundane work that we as tax professionals actually hate, quite frankly. We hate.
I think a lot of people say, I don't want to do this anymore because I'm tired of doing the boring things, right? The ledger reckoning, the compliance, et cetera. This is replacing that.
Or even just data gathering.
Right.
When we ask the clients what actually keeps them back doing overtime, it's a lot of it is just data manipulation, data gather, data processing before they even get to even analyze any of the information. So
I used to use whiteout when we had to change tax returns. And I have never been not busy.
That means you made errors
Technology
still,
has not at all made us less busy, right?
Yeah, so I don't think it will. I think the second thing is as tax professionals, we should be embracing it, because what it will do is it would actually enhance our careers.
Yeah.
So we should be using the technology to get ahead.
We see that in Silicon Valley a lot, where a lot of our professionals who are doing the robotics work and talking to our clients about analytics, they've always said through their careers, we want to go do the fun stuff. We want to go talk to clients about planning and, as their business expands and all of that. We don't want to do the mundane work. I think what RPA offers our people is an ability to be the programmer of the robot, to be the architect of the software that does the cool stuff, and then take the other 80% of their time and go out in the marketplace and help clients with it.
You're absolutely right. I mean, I look at it also through the lens of our global compliance and reporting business globally, right? Where we handle the compliance requirements of thousands of clients around the world. And when you go and talk to all of our people who are playing in that part of our business, their sole focus around this is on it enabling to do their job better and quicker and get to the business relevant points that they want to go and talk to their clients about. And you look at the balance of that on the tax technology side of our business, we think today we're around about 1,000 people globally that are focusing on that. Our target and our aspiration over the next 2 to 3 years is to take that to 5,000 people in that tax technology space. So it's a different mix of skill sets for some of our people, but it's really, to Carolyn's point, we're doing the same thing in a slightly different guise, and it's about getting there in a much smarter way.
And the other part,
Go ahead,
I've
Mark.
seen is there's no shortage of new rules. Like if you think about country by country reporting,
Yeah.
2 years ago, people wouldn't have seen that come to, it's taking a lot of time. Just having a tool to be able to keep up with that. A while back, the United States put in new interest deduction rules, caused a bit, just the volume, I think, of tax legislation and what you're supposed to be able to comply, because I think authorities are saying, you have the data, you should be able to do this. It's going to keep
We want
us all busy.
transparency into it.
Yep.
In the EY world and all over Asia Pac, but also in pockets, Aiden, of EMEA in Germany and in Russia and in France and the UK even, we have people who are building really cool tools that are going to market. They might be around a specific tax, a specific indirect compliance requirement. We've seen the GST wave in India come to rise. Can, Albert, you first, and then Aiden, you talk a little bit about how we're bringing all of those tax technology tools together and how we can offer them to clients in a packaged form so they know what's out there.
Okay, so I think tax technology now, there's probably two types. There's one, which is what I'll call point solutions. So tools that are out there designed to do a specific task, right? The second area, I think, which is also overlooked, is that a lot of companies already have a huge enterprise infrastructure already in place. And that infrastructure itself is often overlooked as tax technology. So the ERP systems themselves are the source of information. They also have functionality, warehouse functionality and data lake functionality that can be leveraged for tax. So I think this is something that needs to be harnessed also for tax. It's just point solutions and also enterprise technology.
Right. Aiden, we've seen some of the coolest tools come out of our EMEA region, some of our big countries, but also don't overlook what you're seeing in some of the smaller countries in EMEA that you oversee. So
I think there are a wide range of tools that are being developed in different places for different things. There are some that are, fundamental. The EY Absolute tool that UKI is building that will be launched very, very soon, targeting small and medium enterprises and providing them with an online solution, is fundamentally different from things that we've done, in the history of EY, as far as I can tell. We then build other tools that are unique, country-specific tools that are absolutely great.
Our client-serving people know our clients the best, and a combination of that with nimble tool sets and technology can solve a lot of problems very quickly, but making sure that there's a knowledge of not only what those nimble tool sets are, but how they can be connected globally, that's where the real power comes from it. So for me, that's why I find it so exciting looking at this part of our business, because fast forward and you can see where the revenue authorities are going, and you can see where organizations are going, technology becomes a very strong driver of the outcomes of success in our business and in the way we interact with authorities and in the way corporates interact with each other.
Right.
So we've got to play a really strong role around that as well.
We have many ex-tax administration professionals in our Mexico practice. And so they developed technology platforms to help our clients respond to the tax authority. And and it was interesting because when they came in and they joined us, they're talking about database technologies and robotics and analytics and honestly, like, oh, tax return software? Really? We need that? Oh, okay. Anyway, but what's cool about it is they've got that, and then we know, oh, okay, well, Peru's requirements are very similar, and so to be able to start to share that approach and that technology is really powerful and exciting.
just an observation for the United States. We made the comment earlier that the United States is way behind on digital tax administration, and I think the IRS is very far behind in terms of being a level 4 or 5. But interestingly, Carolyn, the states in the United States are not.
Yes, the
right? So I
states,
think
yep.
the states are up where
Yep.
we see Russia and what you were talking about, Albert, in China.
Yep.
They administer income taxes, and we don't have necessarily a VAT in the U.S., but we do have a fun thing called sales and use tax.
Right,
And
right.
their use of technologies to administer and collect that is pretty unbelievable.
Right.
And it's advancing faster and faster
And
every day.
the other place I think the U.S. plays is more in customer reporting. So around FATCA, and also employee information reporting. Just the location of where the customers and employees are where they're really tracking a lot of that. Yep.
So our technology path has been an exciting one and a very quick one. I think we've gone certainly from e-filing and I heard one time, John, you and I were in a meeting together, and one of our clients said that they learned or they knew that the most widely used tax tool in the profession today is Microsoft Excel. What I hear when I speak with you guys is that's true today, but the new tools that are coming out that we're developing all around the world, certainly in Europe and in Asia Pac and in the States, as I described, we're going to be at full tax automation, certainly within our careers, before we're gone from EY, as it were. Our younger people are going to be working in a whole new world where technology really drives. And I think the point that's interesting there, and if people say, well, I'm not sure that's true, I think that trend is true for everything, whether that's banking or how you get your home mortgage for your house or how you buy or finance a car. All of that is going in the digital direction. So it makes natural and perfect sense to me and to us that tax technology will be there.
I mean, I absolutely agree with that. You look at industries that have had super high volumes of transaction data to deal with, so whether it's finance or retail, and how they've deployed some of the emerging technologies that are coming much cheaper now than they used to. The things they do blow your mind in terms of tracking retail spend across stores and predicting purchases and all of that sort of stuff, right? So tax is easy, frankly, compared to doing some of those things.
John, you talked about analytics and looking at data. That's a great segue into our last section of our discussion today, which is around tax big data and the use of that data in making better and smarter decisions about opportunities in tax data, but also risks. So I have understood analytics in the general business community to be exercises that our clients, the companies that we advise, undertake to help understand where to focus efforts to grow more revenue, to grow their business. They'll use analytics to predict sales, where should we focus or not focus our time. And I've also seen analytics used in the discipline of controlling expenses. How are we spending our money? How does that profit go out of the door, et cetera. So analytics have long been used by advisors and companies to drive those two basic elements of a financial organization. So it seems very natural yet again to me to see those types of analytics come into the discipline of tax. So John, I'll once again start with you. How are you seeing analytics and the concept of tax big data drive opportunities for our clients?
Yeah, and again, it's an area that's moving so quickly that in 3 months' time there'll be new things that we're not even talking about today around it. But I think if you come back to the starting concepts around analytics that you touched on, Channing, many people when they first talk about it, what they're really talking about is looking in the rear vision mirror, getting the dashboard that tells them what's already happening. Well, that's sort of interesting, but not it's not groundbreaking. We've been doing that in matrices and Excel for years, right? But it's when you shift up that spectrum of analytics and start getting into predictive analytics. Based on what I've seen, what can I predict might happen next month when my effective tax rate comes out?
Right.
Or even more exciting, you go beyond that into the area of preventative. So based on the data that's come through, what action should be triggered or should I undertake to ensure that an outcome doesn't occur? And so that spectrum of analytics, I think, is something that once people get their head around it, they can start saying, wow, I can now start to get data from my organization and from the public domain and start to not just look at what's happened and learn from it, but start to predict what might happen or really start to get into preventing things from going wrong.
I think that's going to be really important because as I've been hearing about the tax administration, digital, we've had the luxury of time when we file tax returns. To be able to frame, I have data, okay, I can characterize it this way or that way, but as you have real-time communication of data, you're probably going to lose a lot of that capability, and being able to kind of get ahead and say, I'm going to live my structure, but I need to make sure my structure is giving the data off that supports it, and I'm not going to have as much ability to fix it in the past. Being able to see what's coming ahead will become very, very effective.
Which
very
is
powerful.
actually it's a good deal for tax because now you can really embed yourself in the day-to-day business versus, taking 9 months, like giving birth, right, to do a tax return. I mean, it's kind of better.
I think the technology that that is now around as well really helps organizations get there much faster than what they use. And Albert mentioned data lakes before.
Right.
I mean, it was only in January of this year I was in a client meeting, they laughed at me when I used the term data lake, right?
Explain what that is. Tell us what a data lake is.
So, how long have we got? So, I'll do it by contrast. So many of us all know the old world of 10 years ago where people talked about tax data warehouses as the be-all and end-all, and organizations might spend $500,000 or $1 million, build this thing over 3 years and come out and go, here it is, and then the next month they'd sell half their business, buy half a new one, change their structure, and the whole thing needed redoing. The concept around data lakes is that basically the organizational structure where the data is held is self-defining. So you can put a lot of data in pretty quickly, it can ingest data very readily, it can start to find its own patterns amongst that data, and that you can then pull it out and use it for any of those predictive or preventative analytics we talked about before. And the amazing thing about it is that a lot of the underlying infrastructure these days is open source.
Right.
So it's not like you're licensing it for large amounts of money. It's about having the intellectual property to know which bits of those building blocks to join together to build a solution that gets out there.
Right.
So that technology, which again, really, even 12 months ago, people weren't talking about, we're spending a lot of time now with clients who, as they look at their technology roadmap, are saying, well, there's a bit of a gap here, and Carolyn's come and talked to me about what's going on in digital government. How am I going to handle all these rule changes when I can't even see my transactions?
Can't see my transactions, right?
I think this is quite amazing because it doesn't have to be as structured as it used to be.
Right.
Right. And secondly, it can combine multiple sources. And I think this is the scary bit as a taxpayer when you think about what the governments are going to analyse. So, but on the flip side, it's also really, really powerful.
I think predictive analytics, analytics that look historically, turning into predictive analytics and the introduction of artificial intelligence, machine-based learning is going to transform all areas of the economy, all areas of finance and tax as a result thereof. You can just imagine the fun that tax authorities would have, Carolyn, in all countries, really being able to predict sales flows, really being able to predict downturns and upturns in the economy as it relates to the amount of tax they're going to collect as an operating government. They can make decisions about what they're spending on based upon predictions about how much money they're going to raise at the corporate level. We do corporate tax compliance, but I think a lot of this also can apply to the individual tax compliance. Those types of analytics are coming into the program. We're seeing our transaction tax practice use analytics to help do due diligence on transactions. We're seeing our people advisory services business helping do analytics on where our people are going and the human mobility concept. So analytics is pervasive in the general digital economy, and we certainly are going to see it become pervasive in digital tax. So what we've done today is try to walk you around our EY digital tax strategy. What we are doing with our clients globally is working with our colleagues all around the world and all the countries in which they do business to help prioritize this framework for our clients, to help them understand which ones of these 4 areas is the most important. And it doesn't mean to say that they're all not important, but some of them come first to different companies in different parts of the world. So that's what we've spent time on in these client discussions. Now we come to the most challenging part where I'm going to give each of my panelists here a challenge to say if there were 2 or 3 items that they would focus on based upon what you do in digital tax, what would you tell our clients, top 2 or 3 things that you would have them focus on? And the challenge is, not that that's hard, I think that's very easy, is that none of you can repeat yourself. So nobody can say what somebody else says. So Yuko, you have the hardest because you have to go last. So Mark, why don't you go first? Top 2 or 3 things.
I would say number 1, understand how the technology is being used in the business. We mentioned 3D printing, you mentioned analytics, you have blockchain. All those are going to fundamentally change what we attach value to, and will also affect the interaction of humans to that value and when you have activity-based rules in terms of, say, you get a benefit if you do this activity. When you automate it, you're going to have a different. So understanding how that plays out in the business is imperative. The other thing is the interplay between what you have been doing in the past, this convergence concept, and how that morphs and plays into what you are doing digitally. And finally, keeping track of what the administrations are doing from a technical law. This is how we want to tax it because it's rapidly changing.
Policies changing. Good. Carolyn, you on a digital tax administration front.
Yeah, I would say top three things to do is number one, get an understanding of what your digital tax administration footprint is really, right? From people that are operating in headquarters, getting that visibility is a great thing to have. Number two is understand what the governments are asking for and how you're providing it to them. And then number three is try to get an understanding of what the authorities are actually doing with it. Why do they want it? What kind of, are you getting notices? Are they looking at certain things about you? Are they exchanging information? Those kind of things. I think that's a great place to start, so you know then how to move forward.
Great. Aidan?
I think I would start from a much higher level. I think, if I look back over the last 6 to 9 months, I think we've come a long, long way in terms of articulating how we see digital, in terms of putting collateral together. We've had some great symposia around the world. We've had a large number of clients start to ask to engage, whether in half-day sessions or full-day sessions. To me, digital is here to stay. It's the mega trend of our time.
So Albert, from Asia Pac, and
Well, I think two things. One, I'd encourage everyone to go out and understand what tax technology they have. So develop a tax technology strategy. And that means going in and understanding the current stack, understanding the data flows that are currently deployed. And that means going backwards from that Excel spreadsheet, if you like, right? So you have to actually understand where that information came from and what you should be, or what potential things you could be using. And the second, as you go and look at the potential things that you could be using, don't just think about going and buying off-the-shelf technology, though some of it will be good and useful, but also think about it in terms of what enterprise technology is available, what tools are already in the organization in terms of source data, databases, in terms of analytics tools, in terms of content management technology. Have a look at what's already available, because you might be able to leverage that without having to buy new licenses.
Great. John?
Yeah, look, I think just a really practical thing that can be done to start with is find someone in the team who's actually passionate about this and give them some accountability around the space, because many of us don't know what we don't know in this area. It's changing quickly, and having someone that's accountable to make connections and learn and grow and bring out some of the ideas is really important. So that'll be sort of a first practical one. And I think my second one is to really add to Albert's one of the sort of build-buy decision, and add into that a decision of actually, do you rent it?
Right.
Okay, so the technology changes so fast. Do you really want to go and build or buy something, or actually do you want to acquire it as a service and have somebody else on the hook for making sure it's up to speed, it's up to date, it's building in all of the components. So that's an alternative as well, I think, to add into the mix to have a think about it.
And Yuko, finally turning to you to close us out from Japan. Japan is coming onto this strong. Later in the summer of 2017, we're going to be together at our Digital Tax Symposium event in Tokyo. Yes. What do you think the top 2 or 3 things are that our clients and taxpayers are thinking about in Japan? Yeah,
so this is probably not just Japan specific, but with the BEPS and the digital tax administration changes, all the transparency requirements, the head offices, the Japanese company's head office in Japan, they're suddenly realizing, I can't just leave subsidiaries to look after themselves with their tax data. I need to understand what they're doing. And the thing is, they only usually have maybe a handful of tax people at the head office level.
A very decentralized,
very decentralized, model. And most of the time they're working on Excel spreadsheets and throwing lots of emails, and so tax technology would really be helpful. At the symposium, we will be introducing demoing some of the technologies that are available, helping tax functions to operate a lot more efficiently. So that'll be interesting to see. The other thing is about this innovation. We've started talking to different partners and staff about digital tax and the framework and what it's meant to mean to us and to the clients. And the changes it's bringing to people. Now they're coming up with ideas and they really want to just implement it straight away. And this energy that's building up in the firm
and that's why I
really
think
good.
all of digital is a huge job opportunity, right? I don't think
Yeah.
robots are going to take anyone's jobs. They're going to create more jobs because of exactly what you just said. So good, thank you. My perspective on it is thinking, listening to all of you talk about, and knowing all of you and what we've all done in the firm is, I started my career at the firm doing tax returns, Carolyn, by hand. Then we were all given Lotus 1, 2, 3 that turned into Excel, and I remember thinking, oh, the potential of this, just how amazing this is going to be. And I also remember at about the same time, it was fabulous to be able to send clients faxes, just how remarkable that was. And it took probably 10 years of the first part of my career to have those changes come through us. What we're seeing in digital, and the reason that we were here today, is to talk about how automated and how automatic and how tax authorities are moving at the same pace clients are to do that. It's going to just speed up, it's just going to get faster. I'll leave you with a few parting thoughts on digital tax at EY. One, this is going to change. Necessarily the way technology is moving, the way law is changing, the way governments are moving, and the rate at which we're developing tools and going to be hiring, John, you've said it here, up to 5,000 people to do this. It's obviously going to morph and evolve and become better and more faster. It's also going to become more challenging. So watch this space. Where can you watch this space? Well, you can do it at ey.com/digital tax. That's where all of us keep all of our clients up to date. That's where you can see who to contact. You obviously can contact any one of the members of the panel here today for more information about where you're based and what you may need.
This webcast has been about the impact of the global digital transformation on the overall discipline of taxation with an eye towards the future of tax. As we've talked to you, our clients from around the globe and our own people within EY, we've recognized that the digital tax discussion is exciting and quickly evolving. We've also recognized that people and enterprises are at various stages of understanding and handling the concept of digital tax transformation. Wherever you are in this journey, the common destination is harnessing new and emerging digital technologies and innovation to transform your tax function, bringing more efficiency, less risk, and creating opportunities for people to do more with their time. As proof of the speed of the digital transformation forces in the global economy, we are excited to share today an exciting development. This webcast was recorded during a gathering of our global digital and overall tax leadership teams in Spain in June 2017. And since our meeting, we've accelerated and are very pleased to share today the launch of a new dedicated practice within EY called Tax Technology and Transformation. Delivered through our EY Tax.Tech brand and globally led by our partner, Sean Smith, this practice is comprised of thousands of globally deployed technology and system specialists that will support our existing tax sub-service lines in providing enhanced technology services to our clients. Whether within global compliance and reporting, indirect or international tax, or any other tax sub-service line, these career technology specialists will help clients fuel innovation, drive efficiency, and build a high-performing, innovative, and truly digital tax function. So you can see that the pace of digital disruption to our business is as exciting and fast for us as it is for your business. As this webcast is the first in a series on the overall digital trends impacting tax, we will most assuredly bring Sean and his global tax technology and transformation team to an upcoming webcast so they can showcase the power of our tax technology and transformation practice and how we can strategically advise you, our clients, to create the tax department of the future. I want to thank our Barcelona panel and all of you who tuned in. Now, before you sign off, please take a moment and click on the link in the slide window and let us know what you thought of today's program. In addition, we would like to hear of other topics that you would like to hear about in our digital tax series. The on-demand version of today's program will be posted on the Thought Center webcast homepage in a few days. This is also where you can view many of our other webcasts, including additional industry-specific events. And if you've been with us for the full hour today, responded to the polling questions, and completed the feedback, you can now download your education certificate by clicking on the purple CE CPE icon at the bottom of this interface. I've enjoyed being with you for the inaugural session and hope you'll join us for future webcasts as we continue to track digital tax and its transformative impact to our practice and your tax needs. From the EY Thought Center, I'm Channing Flynn.